Welcome to TalkTickers. We're your guide for really getting into the details of company earnings calls.
Cutting through the noise.
Exactly. Today, we are diving deep into Asabolo's Q2 2025 earnings. That's ticker ASA.
Yep, ASA.
We'll unpack the key figures, get into what management's thinking, and really figure out what this means for Asabolo and, well, the market generally.
It's a good one. They reported a genuinely strong overall performance this quarter. Really showed some resilience, I think.
Okay, so let's jump right into the big picture then. They delivered 3% organic growth. Solid.
Pretty solid, yeah.
But the breakdown is interesting, isn't it? Low 2% from price, high 1% from volume.
And that volume piece, that high 1%, that's the second quarter in a row they've had positive volume growth.
Right, which, in this market, growing volume at all is, well, it's something. It's not just price hikes.
Absolutely. It signals real demand. Now, total sales were SEK 38 billion, flat year over year, but
there's a catch.
There's a big catch, an 8% currency headwind. That really dragged the top line down.
So strip that out, and they actually grew underlying sales by 8%.
Exactly, which paints a very different picture. Quite remarkable, actually.
Okay, that context is crucial. And operationally, how did that 3% organic growth translate?
Really well. They got fantastic volume leverage, 53%. So a good chunk of that growth drops straight to the bottom line.
And the margins look strong too, EBITDA.
Yeah, EBITDA margin hit 17.2%, which is, strong anyway, but it's actually above their target range of 16-17%.
Exceeding targets, always good to see. And
EBIT margin was also solid at 16.2%.
And cash flow, that's always key.
Very strong. SEK 5.5 billion in cash flow. And get this, a cash conversion rate of 103%.
Wow, over 100%. So they're converting more than their net income into actual cash.
Precisely. Gives them a lot of flexibility. Return on capital employed also ticked up 20 basis points to 14.2%. Net income, EPS, both up 1%. Healthy.
Very healthy signs all around.
Okay,
let's look beyond the numbers. What about the market dynamics they're seeing?
Well, management pointed to continued strong momentum in non-residential and commercial. That's across North America, Europe, Oceania. So definite bright spots there.
But the flip side is residential, I assume.
Right. Residential is still challenging, particularly North America. High interest rates are still biting hard on new construction.
And Europe. ECB cut rates, did that help?
Not yet, apparently. They haven't seen that translate into a residential recovery, although there were maybe some small glimmers of hope. Sweden, New Zealand, seeing a slow pickup in renovation and repair. R&R.
Okay, so R&R showing some life.
Yeah.
Any specific verticals doing well?
Yeah, logistics. Both Europe and North America saw positive activity there. Pockets of strength,
Right. Now, those strong margins we talked about, they don't just happen. What were they doing operationally?
Yeah.
Savings, efficiencies.
Yeah, their execution was really robust. They got over SEK 200 million in savings just from their manufacturing footprint program, the MFP.
Global site optimization thing, right?
Yeah, exactly. And on top of that, more savings from, lean activities, automation, general cost measures. They mentioned some personnel adjustments, too, in America's residential, adapting to that weaker market. Very proactive.
Okay, SEK 200 million from MFP alone is significant. Did that, and maybe other factors, help their input costs, materials, conversion costs?
It absolutely did. Direct material costs were 60 basis points better year over year. Conversion costs, 50 basis points better.
So pretty favorable price-cost dynamics then.
Very favorable right now. But they did caution that they expect this positive gap to, narrow a bit as those hyperinflation effects fade. So enjoy it while it lasts kind of thing.
Got it. Okay, let's pivot to the divisions, starting with the Americas. What's the story there?
America saw 4% organic sales growth overall. If you dig in, North America commercial was up very high single digits. Healthcare, education verticals were particularly strong.
And the specification business, where they get architects to spec their products.
Yeah, that was up double digits across almost everything. Offices and hospitality were the exceptions, still a bit weak there.
Makes sense. And North America residential.
Flat, which honestly, given the market, they considered that a strong result. Latin America kept its momentum, but management did flag some concern about potential U.S. import tariffs affecting Brazil and Mexico.
Tariffs. Always something to watch.
Yeah.
What about pricing in the Americas?
Similar to the group average, interestingly, the steel door business, which had seen price declines, is now expecting increases because of those potential tariffs.
Okay, shifting continents, EMIA, Europe, Middle East, India, Africa. How did that region perform?
EMIA was down 1% organically, kind of a mixed bag within that, though.
Oh. Where were the bright spots and weak spots?
Central Europe and the Nordics did well, especially that Swedish residential R&R recovery we mentioned. But sales were down in the UK and Ireland, partly timing, tough comparisons, and South Europe mostly due to France residential. Middle East was also down.
And the margin there.
13.9%. Management wasn't satisfied. They said they need positive organic volume growth and a continued strong krona to hit their 16% target for EMIA. Still work to do there.
Understood. And Asia Pacific?
Asia Pacific was also down 1% organically. The big drag was Greater China residential and new build down double digits significantly. Big challenges there.
But offsetting that somewhat.
Yeah, strong growth in Pacific Northeast Asia and actually double-digit positive growth in Southeast Asia. And despite the slightly negative organic growth overall, they managed excellent operating leverage. Margin came in at 9.6%. Good cost control.
Okay, now global technologies. Those numbers really stood out. What drove that?
Yeah, global tech was very strong. 8% organic sales growth. Both HID and Global Solutions contributed. Really all business units firing.
And the margin?
Impressive. 18.5% operating margin, again, with excellent operating leverage. They mentioned a positive mix from more profitable subsegments helping too. And the PACX business, that's their Smite Access solution, is expected back to mid-single-digit growth. Real growth engine, that division.
Definitely sounds like it. Okay, last division, entrance systems. How do they do?
Entrance systems was up 1% organically. The real star there was perimeter security, very strong growth.
What's driving that?
Tailored solutions for data centers, logistics, embassies. Plus, they have a competitive edge with local U.S. production. That segment's been growing high single digits for 3 years now, and it's the highest margin part of the division. Very important.
Good to know. What about the rest of entrance systems?
Doors automation and pedestrian showed good growth too. Industrial sales were down though, and service growth was small. They mentioned struggling to find enough technicians. That's a common problem.
Right, and ski data, that acquisition.
Yes, ski data, highly seasonal. They expect the dilution to impact the drag on margins from integrating it to really decrease significantly in Q3 and Q4. So that headwind should fade. Also, order activity for loading docks is picking up, should help sales in the second half.
Okay, so that covers the divisions. Now, Asabolo is always active with M&A.
Yeah.
What happened on that front in Q2?
Oh yeah, very active. 5 acquisitions completed in Q2 alone. That brings the year-to-date total to 11. Annualized sales from those are about SEK 4.4 billion.
Wow, keep it busy. They also sold something, right?
Yep. They finished divesting the Citizen ID business, kept a small U.S. piece related to green cards, but otherwise it's gone. Streamlining.
Any notable new additions you want to highlight?
Well, 2 caught my eye. Telealarm, a German company in remote care tech for seniors. Interesting move into that growing market. And Kingspan, a Belgian maker of door panels, which fits well with their core business.
And the dilution from older acquisitions like Level Lock and Ski Data.
They expect that to normalize, as they put it, in the second half. Basically, the integration costs and initial margin impacts should lessen.
Got it. And any update on HHI? That big North American residential acquisition.
Yeah, they touched on that. Top line for HHI was flat, which, again, pretty good in this market, but the bottom line improved significantly. They're getting back on track towards that 16% EBITDA target, especially as the $100 million in synergies kick in.
And didn't they mention reviewing part of the HHI business?
Yeah, right. The faucet business. Now that they're out of the transitional service agreement, the TSA with Spectrum Brands, they're taking a strategic look. It's profitable, fits the core, but they're evaluating its long-term place in the Asabolo portfolio. Disciplined review.
Okay, so pulling this all together.
Yeah.
What's the outlook? Pricing, demand, what should we watch for?
Well, they expect a pretty good price component for the full year, maybe around 2.5%, assuming tariffs stay as they are.
But if U.S. tariffs worsen?
Then they need maybe a 4 or 5% price hike in the U.S. to fully offset it. That translates to about 1% at the group level for the second half. They'd also renegotiate with suppliers, maybe relocate some production. They have levers to pull.
And that positive price versus cost gap, you said that might fade?
Yeah, they expect it to still be positive in Q3, but lower, and then kind of fade out as those hyperinflation effects really subside.
How's demand looking right now?
Encouragingly, they said demand picked up in June compared to April and May, and that higher growth rate apparently continued into the first few weeks of July. So maybe some building momentum there.
Any other specific outlook points? Geography?
They expect growth to return in the UK in the second half, but a full European residential recovery. Probably more like next year. And they really emphasized their decentralized structure as a strength in uncertain times, allows for quick local responses.
Makes sense. Oh, and they mentioned a Capital Markets Day.
Yes, November 19th in the U.S. Definitely one to watch for more long-term strategy details.
Okay, time for our favorite segment. This is not financial advice. Given everything we've heard, what's an interesting, maybe slightly out there trade idea based on Asabolo's Q2?
All right. So based on their strong execution, especially in non-residential, and that surprising volume growth, how about this paired trade?
Let's hear it.
Go long Asabolo, ASA. The rationale: proven operational ability, strength in high-margin specification business healthcare, education outperforming the market backdrop, solid cash flow, smart M&A. It's a resilience play.
Okay, long Asabolo, and the other side of the pair.
Simultaneously, consider going short a highly leveraged, less diversified U.S. residential construction supplier, specifically one heavily exposed to new builds.
So hedging the residential weakness that Asabolo is managing better.
Exactly. You're targeting companies likely lacking Asabolo's operational muscle, their innovation, or their ability to handle things like tariffs through local production. It's basically a bet on Asabolo's agility versus a more vulnerable player in a tough segment.
Interesting. A bet on strategic execution in a mixed market. I like it.
Yeah.
Plausible, yet provocative.
That's the idea.
All right, so to wrap things up on Asabolo's Q2, I mean, a really robust quarter, wouldn't you say? Showcasing strong operations, strategic moves, all despite those currency headwinds in the tricky market mix.
Definitely. Key takeaways for me are that organic volume growth, beating their own margin targets, and really effective cost and acquisition management. They seem very much in control.
Absolutely. Now remember, everyone, what we share here on TalkTickers, it's purely for informational purposes.
Definitely not financial advice. Always do your own homework. Maybe talk to a qualified financial advisor before making any investment decisions.
So what stood out most to you about Asabolo's quarter? And what do you think that positive volume growth really means? Let us know your thoughts. You can always reach out.